Hey, what's up, everybody? Today I wanted to quickly walk through my strategy for how to always make a profit with stocks, even in a down market like we're currently in. So today's March 23rd of 2022. We had a pretty great run with the stock market over the past couple of years, but right now we're in a down market. Things are just probably at about a quarter of what they used to be. So first and foremost, before we talk about this strategy that I utilize, I am not a financial advisor. Please consult a professional for any stock buying tips, any stock investing, any kind of investment advice at all. Always consult a professional. This is what I do. Your numbers may appear different. Your results may vary. All that kind of stuff. So the first thing I want to talk about is kind of the strategy. Then I'm going to talk about why I think you can do this in an up or down market. The concept being, when you're an investor, you always want to continue to buy, whether it's an up market, down market, or not. You are buying for the long term. However, it doesn't mean that you have to buy and hold a stock forever. As we will see in a moment, stocks go up, they go down, the market goes up, the market goes down. Long-term investment strategy is to just buy, whether it's a daily basis, weekly basis, monthly basis, yearly basis, whatever it might be. The more you invest, the more likelihood over time, the more likely you are to turn a profit. Day traders can get killed, quite frankly. That all being said, what we want to do is we want to first try and find good stocks that we think are worth investing, that we think are going to turn a profit over time. But what we also see is that stocks, even the best stocks, go up and down on a daily basis and a weekly basis. And so there's an opportunity to kind of profit from those market moves. So let's look at a stock, for example, like ExxonMobil. So what we're going to see is, if you look at the kind of like the 3 year, what you'll see is ups and downs. 1 year you'll see again ups and downs. 1 month we'll see some ups and downs. Even sometimes in the 5-day forecast, or 5-day forecast, the 5-day trend, you'll see some ups and downs. So what we're looking to do is find a stock, and I like to kind of track an individual stock over a period of time before I invest in it, to kind of feel out what the up and down price points are. So, for instance, if we look at Exxon, this is over the past 6 months. We were down anywhere from the 50s to 85. But what we're going to see over the past kind of 30 days is that it's been up at 87.50 and down in the 70s. And so this gives us kind of a market buy opportunity, in my view. But I also look for something that might have a dividend. A yield is always nice. I'm looking for something that has a low PE. This one's a 15%. Or 15 times earnings. But more importantly, what I'm looking for is I'm looking for some secondary advice. Beyond my own research, I'm looking for people to kind of say, yeah, we think this is a good stock as well. So I'm going to recommend 2 companies that I do not, they're free tools, so you don't have to pay for them to give you this advice. But what we're going to do is, what we're going to try and figure out is a stock that we think we're buying on the downturn, buying at an opportunity where we think that it may go up, 5 to 10% minimum over the course of the next 60 to 90 days. And then from there, we're going to use our stock profit strategy. So first thing we do is, again, I'm going to recommend a company called TipRanks, and I'm going to recommend a company called Zacks. All right, and what we're going to do is, the reason I'm going to show you these 2 tools is because I think they do a pretty decent job of sharing information. But what I'm going to also do is kind of piggyback the information on the 2 of them to try and find whether or not I like a stock or not. So ExxonMobil, for example, they've got 23 moderate buy ratings. They see a 5% upside on this stock based on those experts. And overall, they see an 8%, smart score, or a number 8 for smart score. These are anywhere from 1 to 10. They give you some analyst forecast, blogger sentiment, insider trading, stuff like that. So they give you a number of different variables where they think it's good or bad. And again, all the information is right here. You can see kind of the 52-week range. So let's just say that we're going to look to buy this thing right about 83. And that's okay. I don't necessarily think that's the best time to buy it, but let's just talk about it again on here. Zacks is a great, great tool. This one, they see it as a strong buy. And one of the cool things I like about Zacks is they give you kind of a thing called Zacks Rank, where they give you a bull of the day and the bear of the day. So if you're looking to short a stock or buy long on a stock, it gives you not only the bull of the day, but some great stock tips that are stock investment ideas on a daily basis of things they think are long-term strong buys. So once we find that we think we like a stock, what I would do is I'd be looking for the dip into the 70s here, because again, over the past couple months we've seen that it's been riding, but right now we're looking at 83. So what I'm going to do is I'm going to set up a buy, for example, of like 100 shares, and it would be ExxonMobil, and what we would do is limit. We'd put a limit order, and what we would be looking to do is put something like $78 per share, and we do good to cancel. That way we don't have to worry about it. So what we're going to be doing is not necessarily trying to buy at a market moving price. We're going to buy when the thing dips. Now, if you did buy at 83, that's okay. The rest of this strategy is going to kind of help you lock in on a price point anyway. But real quick, what I wanted to cover was buy the dips, and you don't have to time it. You can use a limit order to kind of watch that market. And again, over the past month, we've seen that it goes up and down, and we want to try and take advantage of those dips. Just about every stock out there has seen these kinds of dips. Facebook has, Advanced Micro Devices. What we're going to see is, again, this consistent dip of over 10%, because there's volatility in the market. People don't know what the heck they're doing. Right now it's up 1%, but again, back in mid or the end of February, less than a month ago, we were trading at 125, but just a week ago we were down at 103. So there's opportunities to steal profits based on the volatility of the market. Now, how do we lock in those profits? And that's the key here. So now that we've bought our stock, and let's just say we bought it at 78, what we want to do is kind of figure out at 78, what is a price point that I'm comfortable stealing profits with. So for me, it's a 10% profit margin. So if I bought it at 78, what I'm going to do is I'm going to look at a target price of 85.80 at that point, where it's going to lock in 10%. So to maximize this with 10%, what we're going to do is use a stop market. And basically, we're going to set it to good till cancel, again, because what we want to try and do is maximize that price. Now, this assumes that the stock has already gone over 85.80. So the stock we bought at 78, and now it's going up at 83, and it might take time. Again, this is not for day trading. This may take a month. It may take a week. It may take 3 months. It may take 5 years. Who knows? But the idea is to never sell at a loss, but only sell at a profit. And so what we're looking for is good stocks that go up, and once they're over that 10%, we start using the stop market. So once we're at 85, 80 or above, we start putting up that stop market. And as the stock goes up, if it goes up to 95, we may want to put it at 90 and 90, 92 or 95 even. And that way, when it dips, it's going to sell. It's going to trigger that sale. So there's two options here. Either we can just take that profit, and again, if it's at 85.80, we're going to take our 10%, which is again about $7 a share, call it $700 in profit. Or what we can do is we can keep some shares of the stock. So rather than doing 100 shares at 85.80, we might just go ahead and sell 95 shares. And that way we know that we're getting our original purchase price back. And again, do the numbers on your own to make sure that the numbers are right. It might be 95 shares, it might be 93 shares, it might be 98. I'm not going to do the math right now, but basically what you want to do is whatever your investment price is, you sell enough of that stock to equal that, and there's no trading fees. So you get the right amount of investment back, and then you'll be left over with a couple shares of stock. Now, sometimes that stock will go up, sometimes it'll turn into a pumpkin. I've got shares that turned into a pumpkin of things, but I've also got things that have made a pretty hefty profit. So that's how you maximize your profits and with stocks, even in a down market.